I would like to welcome you all with a quote by William Butler Yeats. Education is not the filling of a pile, but the lights of a fire. Good morning, everyone. It is my pleasure to welcome you all for the third day of our national level 5 days workshop on GST and its implication on business. On behalf of PG Department of Commerce and IQAC, in association with Chengalpattu District Branch of the Southern Indian Regional Council of ICAI, I would like to extend a special welcome to our chief guest, CA R.B. Bhuvaneshwari ma'am. I am also excited to welcome our director, Shri K.B. Arun, our Honorable Dean Dr. R. Revati, our respected Principal Dr. R. Geeta Rani, our beloved HOD Dr. J. Radha, and professors. Last but not the least, I am very happy to welcome all the audience for the national level webinar on time and value of supply. Now, I would like to invite Ms. Yarini to highlight the achievements of the speaker today.
Thank you, Ms. Vasundhara. Bhuvaneshwari RV is a practicing chartered accountant and a partner in Madhubalan and Associates. She is a chairperson in Women Empowerment Committee of Chengalpattu District Branch of the Southern India Regional Council of ICAI and a chairperson in Indirect Tax Committee of Chengalpattu District Branch of the Southern Indian Regional Council of ICAI. Her academic works include a master's degree in commerce from University of Madras and a postgraduate diploma in financial management from University of Pondicherry. She is also qualified independent director from Indian Institute of Corporate Affairs. She is a fellow member of the Institute of Chartered Accountant of India and an associate member of the Institute of Cost Accountant of India. She had got about 9 years of experience. Her specialization includes a consultant to management regarding GST laws and rules and a consulting on all GST compliance and issues. She expertise in GST audits and a speaker in various forums and continuing professional education session of ICAI at branch levels of GST. She is a faculty on indirect taxes, GST for students at intermediate level. Her team has 6 qualified CAs, including qualified forensic auditors and a registered valuer. More than 15 audit staffs and assistants who are having versatile explore in indirect taxes, and company laws and compliance. Also, having a separate team for supporting insolvency and valuation related services. Undoubtedly, we are very happy for your presence, ma'am, on the third day of our national level 5 days workshop on GST and its implication on business. Now, I call upon ma'am to share her knowledge on time and value of supply. Welcome, ma'am.
Thank you very much, ma'am. Very good morning to all, and I'm very happy. It's my pleasure to be part of this national level 5 days workshop organized by Krishnaswamy College and Chengalpattu District Branch. And today, our topic for discussion is time and value of supply. Let me share my presentation. Hope by this time you all could have understood about the terminology supply. And this supply is always leviable to GST. So whenever a particular transaction qualifies to be a supply, it is leviable to GST. But we have to decide on which particular point that this supply is leviable to GST. Because all the transactions are not a single point transaction. All the transactions are a very sequence of transaction under GST. See, because right from buyer placing an order to the supplier, and the supplier has to confirm that order, and then he has to execute that order by dispatching the goods to the buyer. So the goods have to move out from the premises of the supplier. The goods have to be in transit, and finally the goods will reach the buyer's premises. Now this is a series of transaction. So now the point is at which particular point the GST is payable, or at which particular point the supply is leviable to GST. So for deciding this, we are going to discuss about the provisions of the time, and also with regarding to the value, what is the value on which the GST has to be paid. We are going to discuss about the value of supply under GST. So before moving into the provisions of this time and value of supply, I just want you all to get a better understanding of few terminologies that are used under this provisions of time of supply and value. So the first definition that we should try to understand is, what is the terminology, what is the term called supplier, who is called as the supplier. So any person who is supplying the goods or services. So in a broader, to a little broader concept, not only the person who supplies the goods or services, but also a person who is acting as an agent of such, on behalf of such supplier, will also be called as a supplier. So now there are two
Ma'am?
people. Yes, ma'am.
Ma'am, sorry to interrupt. Could you
I,
please switch on to that slideshow, ma'am? Because the full screen is not visible.
yes, ma'am. Yes, ma'am. Now I have switched on to the slide mode. Is it okay now?
No, ma'am. We can't able to see it.
Now it is in the full mode only, ma'am. Full screen mode only.
For us, it is not on a full screen, ma'am.
Yes, ma'am. Actually, I've tried to show it in a full screen mode only, but is it still in a normal mode?
Yeah, ma'am. It's still in that, ma'am.
Is it visible so that I can continue? Is that a
Yeah,
problem?
ma'am. It's visible, ma'am.
Okay, okay. Then shall I continue, ma'am, in this mode itself?
Yeah, okay, ma'am.
Okay, okay. Thank you. So the next definition that we have to try to understand is the term recipient. Who is called as the recipient? Actually, there are 3 points to decide on a person who is to be called as a recipient. The first point is that whenever a consideration has been paid, or the person who is liable to pay the consideration. See, what is a consideration? Something in return. If I buy any goods, or if I avail any services, in turn I have to pay something to the supplier. That is called as a consideration. So the person who is liable to pay the consideration will be called as the recipient. In some cases, there will be no consideration at all. There is no terminology like consideration. It can be a free of cost supply or anything like that. In that case, the person to whom the goods are delivered, or the person to whom the goods are made available, will be called as the recipient if there is no consideration involved. And the last point is that if it is a service, it is not like it is not like delivery of goods, or it is not like payment of consideration. It is a consideration, it is a service. So in that case, the person to whom the services are rendered will be called as the recipient. So now, based on these 3 points, you have to decide which person will be called as a recipient under GST. The next definition is the reverse charge supplies. What is a reverse charge supply? See, usually when the supplier collects the tax and discharge it to the government, that will be called as a forward charge mechanism. Now, instead of the supplier collecting the tax, here the recipient himself have to pay the tax to the government, which is called as a reverse charge basis. And this reverse charge provisions are discussed in the section 9.3 and 9.4 of the Central Goods and Service Tax Act. It is a very broad area which has to be discussed. So as of now, let us try to understand what is the meaning of reverse charge, where the recipient have to pay the tax to the government under reverse charge basis. The next definition, removal. Section 2, subsection 96 of the CGST Act defines the term. What is mean by removal? See, removal in the sense when the goods are dispatched by the supplier. When the supplier removes the goods from his premises that is called as a removal. Or sometimes if it doesn't require removal from the supplier premises, but it requires something like installing, like installation at the recipient premises, the goods may be taken in parts, the goods may be dismantled and taken in parts, and directly it may be assembled or installed at the customer side. So that is called as a collection of goods by the recipient. So either it can be the goods dispatched by the supplier, or the recipient can collect the goods. So these two explanations are given for the term removal. The next terminology, section 2, subsection 32 of the CGST Act defines what is meant by continuous supply of goods. See, we all could have seen the goods which are transmitted through any pipeline, the goods which are transmitted through wires, cables, etc., where the supply happens continuously, like 24 into 7, without any stop in between. The goods are being transmitted or transported continuously, where the periodical payment, with the periodical payment obligation, when the goods are transported continuously, when is the time at which the recipient will be paying for the goods? So that is under a periodical payment obligation, or the payment will be under a contractual basis. Say I have to pay monthly. Every day I will dispatch you the goods, but you need to pay me on a monthly basis, or you need to pay me on a quarterly basis or half-yearly basis. This is a periodical obligation or a contractual obligation in the case of continuous supply of goods. Next, moving into section 2, subsection 33 defines what is meant by continuous supply of services. See, when the service is being rendered continuously for a period of 3 months, the period exceeding 3 months, and along with the same periodical payment obligation. See, the payment will be made monthly, quarterly, half-yearly, etc. But the total tenure of the service should exceed 3 months. When the services are rendered continuously exceeding 3 months, this is called as a continuous supply of services. So we are all going to discuss about the time of supply for all these. In the case of continuous supply of goods, in the case of continuous supply of services, what are all going to be the time of supply, we will be discussing in the subsequent slide. Now I am into the provisions of section 12, which talks about the time of supply of goods. See, we have a separate provision for goods governing the time of supply, and also separate provisions for services. Since both are different, we have a separate provision for goods and services separately. Section 12 exclusively talks about the time of supply of goods. Now, when is the point at which the GST liability or the levy of GST has to be done in a particular supply transaction? Now, the government always aims at collecting the revenue at the earliest. It is always at the earliest. The revenue collection will not be deferred. So based on this concept, at the earliest of the following, the two criteria that we will be deciding. So there are two dates on which we will be deciding on one of the date which is at the earliest. So we have to arrive at two dates. We have to compare these two dates which are at the earliest. Which one is at the earliest will always be the time of supply of goods under GST. So now let me move on to the first criteria. What is the first date that we have to decide? The first date will be the date of issue of the invoice. The date of issue of the invoice by the supplier. See, whenever the supplier issues the goods or removes the goods from his factory, or whenever he makes a supply, he will be preparing a tax invoice and issuing it to the buyer. So this is that date. The date on which the invoice has been prepared, or the date on which has been mentioned in the invoice, that is said to be the date of issue of invoice. But there is one more condition that you have to keep in mind before arriving at this date of issue of invoice. Whether this particular invoice has been issued as per section 31 of the CGST, whether this particular invoice has been issued satisfying all the provisions prescribed under section 31. Now, what is that provision prescribed under section 31? What is the condition that we have to get satisfied before issuing the invoice? Now, the condition is that the supplier has to issue the invoice. See, look at the condition which I have given below, section 31. The invoice should always be issued before or at removal for supply if it requires movement, or delivery for making available in any other cases. So the moment when the goods leaves the premises of the supplier mandatorily have to issue the invoice as per section 31. So this is a condition. The moment the goods step out of the factory gate or premises, the supplier have to send the goods only along with the tax invoice. Or otherwise, if it doesn't require any movement, but sometimes the goods may be taken in parts. See, let us take the example of a very big windmill. The windmill will get transported in parts. The wing separately, the body of the windmill separately. All these will be transported in 2 to 3 different trucks. So now, when it is taken to the recipient premises and then thereafter the installation or the assembling work is being done at the customer premises, before making delivery or before making available in the hands of the recipient, the tax invoice has to be issued. So this is a condition as per section 31 which every supplier has to follow. Now suppose when the supplier have not promptly issued the invoice as per section 31, which means the goods have been taken on, say the goods have been removed from the factory on July 1, but the supplier has failed to issue the invoice and finally he is issuing the invoice only on July 5, then in that case, what is the date of invoice that we will be considering at this criteria? The date of invoice will be July 1, which is the date on which the invoice ought to have been issued. Actually, this is the date which the supplier is liable to issue the invoice. That date will be considered as the date of issue of the invoice. So now I have arrived at first date, the first criteria. What is the date of issue of the invoice? You just keep this by other side. Now we'll move into the next criteria for deciding on another date. What is the second date? The second date is the date of receipt of payment. Date of receipt of payment. Again, whenever the supplier issues or supplies the goods, he will be receiving the payment for the supply. What is the date on which he is going to receive the payment? See, sometimes it may be a cash payment, sometimes it may be paid by check, or the payment can be in any different by any different terms, like even net banking, NEFT transaction can be used. We always have to go with the earliest of the payment. What is that earliest of the payment? The entry which is made in the books of accounts of the supplier, that payment has been received, money has been received, that date, or the date on which the payment has been credited into the bank account of the supplier. So earliest of these two dates will be considered for the date of receipt of payment. See, today let us assume that on Friday the supplier receives a check. The accountant of the company makes an entry in his books that check received from Mr. A for the supply. And since it is Friday weekend, he's very busy, he goes out. And finally, he comes to office only on Monday. On Monday only, the check will be deposited into the bank. And it will take another 2 or 3 days for clearance. And finally, the amount will get credited into the bank account of the supplier only on Wednesday. But the entry has been already made in the books on Friday itself. So now the comparison between Friday or Wednesday, whichever is earlier, of ultimately Friday will be the date of receipt of payment. The date of receipt of payment, which is the earliest of the two. The date of entry or the bank account getting credited, whichever is earlier will be the date of receipt of payment. So now I have finally arrived at two dates. One is the date of invoice and the other one is the date of receipt of payment. So again, I have to go with the comparison, whichever is the earliest of these two dates, that one will be called as the time of supply of goods under GST. So now we have finally arrived at one particular day, which is decided as the time of supply. On this particular day, the GST has to be discharged. The GST has to be paid to the government by the supplier. So this is the provision. Now there are a few more additional points which you have to keep in mind while discussing about this time of supply. Suppose if the supplier receives something in excess. Suppose if the supplier has billed for 1,000 rupees, but he has received 1,500 rupees in addition. Might be because of the mistake made by the recipient or his accountant. He has received in excess of 500 rupees. Excess of 1,000, he has received 500 rupees. Now, what can be the time of supply for those excess amount received? See, now we have to go with the condition. If the excess amount received is below 1,000 rupee, whenever the excess amount received is up to 1,000 rupee, then the supplier will be having an option to decide on the time of supply. What is that option for the supplier? Either the supplier can consider the time of supply as the date on which that excess amount has been received, or he can defer it to the next subsequent supplies. So which means in the next subsequent transaction, he can adjust this amount so that it could be treated like an advance. So in that case, the time of supply will also be deferred to the next subsequent transaction. Now this is entirely at the option of the supplier. But you have to always remember that this option is given only when the excess amount received is up to 1000 rupee. When the excess amount received is more than 1000 rupee, there is no option at all. Mandatorily, the date on which you have received such excess amount will be considered as the time of supply for the supplier. Section 31 condition we have discussed when the tax invoice have to be issued. The next point that you have to remember, supply is deemed to be made to the extent of the invoice or the payment made. What is that deemed to be made to that extent? See, there is an, look at the example. There is an agreement for agreement entered for the supply of 100 kg of rice, okay, between a seller and the buyer. But actually the supplier was running out of stock, so he have supplied only 80 kgs of rice. But the contract already entered was for 100 kg, but the actual supply was done for only 80 kg. So our provisions of time of supply will also be applicable to the extent of 80 kg only and not for the 100 kg. And this is why I told you supply is always applicable to the extent of the invoice made or the payment done. Since because the contract is for 100 kg, I cannot decide on the time of supply for the entire 100. Whatever have been supplied actually, or whatever have been paid actually, to that extent only the time of supply has to be discussed. Moving into the next slide. This slide I've given you an example for a better understanding of the provisions of time of supply. Okay, see, there is a supply contract for 100 office chairs, and this contract was made on 21st August 2020. Now, chairs are removed from the warehouse of the supplier on 5th September 2020 along with the tax invoice. So now, look at this point. The supplier is very prompt and he is very correctly satisfying the provisions of Section 31. What is the provisions of Section 31? Tax invoice has to be issued whenever the goods are removed from the factory. Since the goods are removed from the factory on 5th September, he is also issuing the tax invoice at the same date on 5th September. So he is very prompt in issuing the tax invoice. So now can we decide on the first date, first criteria? What is the date of invoice? The date of invoice will be 5th September 2020. So now we have arrived at the first criteria. Moving into the second criteria, the date of receipt of payment. See, look at the transaction, look at the event which happened next subsequently. 30% of the advance was paid on 21st August and 70% of the balance payment was paid on 10th September. So the supplier is receiving the payment, receiving the balance on the entire payment on 10th September, which should be considered as the date of receipt of payment, which is 10th September 2020. Now we have ultimately arrived at two criteria, two dates. Now we have to decide on whichever is earlier. So the earliest of 5th September or 10th September, whichever is earlier, ultimately the time of supply of goods will fall on 5th September 2020, the earliest of all the transaction. But you have to note one particular word here. There is 30% was paid by way of an advance on 21st August. See, when the contract was entered itself, the buyer has paid 30% of the amount as advance. Advance is something when you call some consideration as an advance when the supply has not been done, or even when the supply has not been commenced, but still you pay to the supplier, that will be called as an advance. Now, what will be the time of supply for this advance amount which was paid earlier? Which was paid earliest to all the subsequent transaction, which was paid on 21st August. Now we have a notification from the government. The notification which was received on 15th November 2017, notification number also I have given here. This notification tells you that whenever advances is received for the supply of goods, we need not go for arriving at the time of supply. Then when shall the time of supply be decided? It shall be decided when the supply has been completed, when the entire supply has been done, and when the final payment has been received alone, time of supply should be arrived. But you have to keep in mind that this relaxation not to arrive at the time of supply for advances, which means advances need not be considered for supply under GST. This relaxation is applicable only for the time of supply for goods, only when the supply is goods. Suppose when the same supply is for services, definitely you have to fix on the time of supply when you receive an advance. The advance it might be even 10 rupee, it might be even 100 rupee. The values doesn't matter. Whenever you receive any advance amount for any services which is going to be rendered, definitely you have to arrive at the time of supply. Since this is for goods, and this example we are discussing about the goods, and as per this notification number 66, I am ignoring the advance date on which some amount has been received by way of an advance. 30% of the amount has been received by way of an advance. So I need not consider this point. So ultimately on the balance payment, when it has been made, that date will be taken as the date of receipt of payment. Hope this example is clear to you all. I'm moving into the next section 31. See, already we have discussed the section 31, explaining you that when the invoice has to be issued for movement. Okay, now we also have to think about when the invoice has to be issued in the case of continuous supply of goods, and when the invoice has to be issued in the case of goods which are sent on approval basis, sale or return basis. So now in the case of continuous supply of goods, where I told you goods will be supplied continuously, it might be oil transmitted continuously in a pipeline, or it might be any transfer of data through any wires or cables or any pipelines, etc. Invoice should be issued before or at successive statements of accounts are issued or successive payments are received by the supplier. See, whenever the supplier makes a continuous supply of goods, he might be issuing a statement of accounts intimating what is the quantity of supply made, what is the description, what is the value of the supply made. All these things will be listed out in a detailed manner in a statement. So before issuing such a statement to the recipient, the tax invoice has to be issued, mandatorily issued by the supplier. Or the supplier might also be receiving payments from the recipient on a contractual, because this is done on a contractual basis, on a periodical basis, he might be receiving the payment, say weekly, monthly, half-yearly, etc. So on or before receiving such payment, the supplier has to mandatorily issue a tax invoice. So you have to remember, it's a statement of accounts issued or the payment received, whichever depends on the criteria. You have to issue the tax invoice. Look at the example which I have given here. Gas is supplied through pipeline, so it's on a continuous basis. Monthly payments are made. The payments are made in July 5, August 5, and September 5. And the payment amount is 2 lakh rupee, which is made for each month. So it is a monthly payment obligation. For June month supply, I have to pay on July 5. July month supply have to be paid on August 5. For August, I need to pay on September 5. This is the dates on which the payment has to be made. So on or before receiving such payment, the supplier has to issue a tax invoice. So this is a provision telling you that on or before receiving the payments, the supplier has to issue the tax invoice. Now, in the case of goods which are sent on approval or sale or return basis, see, there might be few scenarios where few transactions or few events happening, like the recipient will take away the goods. The recipient will take away the goods based on few conditions that if he prefers to buy the goods, if he like the goods, he have to show his acceptance after taking the goods. If he doesn't like the goods, then also he has to intimate to the supplier that I don't like the goods. So this is usage, like it might be on a trial basis. You use the goods for a particular time and then you convey it to the supplier. So goods are sent on sale or return basis. Now when the invoice has to be issued, invoice has to be issued at the earliest of before or at the time of supply. What is the time of supply? When the buyer confirms you that, okay sir, I like the goods, so I would like to buy the goods from you. This is a confirmation statement given by the recipient. So when this confirmation statement is given by the recipient, we can say that the supply has happened at this point. Or in some cases, the recipient might not even confirm anything. So he might be very silent, and the period of such when the goods are taken from the supplier's premises, ultimately it might be more than 6 months. So when the 6 months have expired from the time of taking the goods from the supplier, the recipient have not responded so far. So the moment the 6 month expires, the date on which the 6 month expires, then the supplier can confirm that this is the actual supply done. Supplier can come in. There is no response from the recipient and the time has expired. It is 6 months have expired. Then the supplier can confirm that the supply has happened. So at that moment, before or at that moment, the invoice has to be issued. So it is always at the earliest of before or at the time of supply or before 6 months from the date of removal, the invoice has to be issued by the supplier. So these are all the few additional points which are getting covered under section 31 in case of continuous supply and goods sent on sale or return basis. Moving on to the next slide. Section 12 does not only give you the provisions for arriving at the time of supply under forward charge, it also lists out you the provision for arriving at the time of supply under reverse charge basis. I already explained you what is mean by reverse charge at the beginning of this session. So now what is the criteria that you have to keep in mind while deciding on the time of supply for reverse charge? Now, earlier in the previous slide, we had 2 date criteria. We decided upon 2 criteria. Now here we have 3 criteria for deciding upon the time of supply under reverse charge. What is the first criteria? The same point, similar point which we discussed in forward charge, the date of receipt of goods, the date on which you are actually receiving the goods from the supplier. See, this is a reverse charge which has to be discharged from the recipient angle. Okay, now I am not talking about the supplier's angle. Please forget about the supplier. Now I am into the recipient side. I am talking from the recipient angle. What is the date of receipt of goods? The date actually on which the recipient have received the goods. That is the date of receipt. You have to arrive at that date. The second date will be date of making payment. What is the date of making payment? Again, you have to go by analyzing 2 dates. Earliest of these 2 dates will be the date of making payment. What is the 2 dates? The entry made in the books of accounts of the recipient. Okay, that payment is made today, the entry made in the books of accounts of the recipient, or the date on which the bank account of the recipient is getting debited. See, earlier we discussed about payment getting credited because supplier receives the payment. So it is a credit entry into the bank. Now the recipient is making the payment. So of course it should be a debit entry in the recipient's bank account. Earliest of these 2 dates, the date of entry into the books of accounts or the date of bank account getting debited, whichever is earlier will be called as the date of making payment. So second criteria also I have arrived at. Now moving into the third portion, third criteria, the date after 30 days from the date of invoice. See, the supplier might be a person who is not liable to pay GST. And now that's why the reason that the recipient have to pay under reverse charge basis. Since because the supplier will not be paying any GST or will not be having any responsibility for collection of GST, he might be issuing any document. It might be an invoice or any other document. It is not always a tax invoice. A person who will not collect tax cannot issue a tax invoice. So he might simply issue an invoice or any other document. It can be a simple cash memo or even it can be a simple bill. So based on that document, the date on which the particular document has been issued, 30 days, you have to go across 30 days from this particular document date. So you have to move into the 31st day. You have to move into the 31st day. Date after 30 days means you have to land on the 31st day. Say, for example, it is on June 1, or let us say it is July 1. I am issuing an invoice. What is the 30 day after this 1st July? So it will be ultimately 31st of July. So now I have to land on 31st of July. So this 31st of July will be the date which you have to fill it up under the third criteria. So now you have to go with the comparison of the earliest of date of receipt, date of making payment, date after 30 days. Whichever is earlier out of these 3 dates, whichever is earlier will be the time of supply under reverse charge basis. So look at the example which I have given below for your better understanding. May 4th, the supplier invoices the goods under RCM. Okay, supplier issues a document, and he also supplies the goods. So 30 days from invoice date is June 3. 30 days from invoice date. What is the invoice date? It is May 4. So from May 4, I have to arrive at 30 days after. So ultimately, I will be landing on June 3rd. I will be landing on June 3rd. So now this third criteria I have arrived at. I have arrived at the third criteria. On May 12, the goods are being received. May 30, the payment is being made. So ultimately, the first two dates also I have arrived at. So now the comparison is between June 3, May 12, or May 30, whichever is earlier. Ultimately, May 12 will be the earliest of all the three dates, and hence May 12 will be the time of supply of goods under reverse charge basis. So this is how we have to decide. Now, one more additional point you have to keep in mind. Suppose if it is not possible for you to identify the dates, this three criteria, information is not available to you, or you might be having only half of the information. Half of the information is not available to you because you are only the recipient. You are not a supplier. In that cases, how do you go by deciding? How do you go by arriving at the time of supply? This is a residual clause. The time of supply will be the date of entry into the books of accounts of the recipient of supply. So this is the final date, that which is the only information that you are having in your hand. Then that could be the date of the time of supply of goods under reverse charge basis. The entry which is made in the books of accounts of the recipient will finally be decided as the time of supply under reverse charge. Okay, now I am moving into the next slide, section 13, which talks about the time of supply of services. I told you already, the provisions are given separately for goods and for services. Now for services, you have to go by deciding on two particular criteria, which mean again the earliest of the two dates will be considered as the time of supply of service. What is the first date? You have to go by deciding the invoice date. What is the invoice date? When the invoice is issued within the prescribed time under Rule 47. So what is that Rule 47? What is the prescribed time? Prescribed time is always only 30 days from the date of providing the service. It is 30 days. On or before this 30 days, you have to issue the invoice. The supplier have to mandatorily issue the invoice. If not, if he is not issuing the invoice, then what is the date I have to arrive at? If no, then the date of providing the service will be considered as the date of issue of invoice. If you are promptly satisfying the provisions of Rule 47, then the actual date of issue of invoice will be considered. If you are not satisfying the provisions of Rule 47, if you are not promptly issuing the invoice within 30 days, then you have to go with the date of providing the service. So this is the first criteria. What is the second criteria? Date of receipt of payment. So again, date of receipt of payment, immediately you have to think of 2 points. Two criteria in your mind. One is the date of entry into the books of accounts of the supplier. The other one is the date on which the bank account of the supplier getting credited. So earliest of these two will be considered as the date of receipt of payment. So now we have to compare between these two dates, whichever is earlier. Out of this, whichever is earlier, that date will be the time of supply of services. So you have to keep in mind one more additional point. Again, the similar provisions which was applicable to goods also. When you receive any excess payment, and that excess payment is up to 1,000 rupee, then the supplier will be having an option. I told you this provision also at the time of discussing for time of supply of goods. I told you the same provision is applicable here also. Look at the example. A telephone company receives 5,000 against an invoice of 4,800. Actually, the bill sent by the telephone company was for 4,800 only, but by mistake, the customer have paid 5,000 to the company. So how much is the amount of excess received by the supplier? 200 rupee is the excess amount which has been received by the supplier. Now, because this 200 rupee is less than the prescribed limit of 1,000 rupee, now the supplier, the telephone company will be having an option to arrive at the time of supply for this 200 alone. What is the option? The supplier can defer it to the next subsequent invoice, or if he wish, he can declare the time of supply on the date of receiving such excess amount of 200 rupees. So this is the option which is available to the supplier. And similar deeming calculation already explained you, supply deemed to be made to the extent of the invoice made. Supply is always deemed to be made to the extent of invoice, nothing in excess. The contract would have been entered for 100 kg of rice, but I have supplied only for 80 kg. So supply is always made only to the extent of 80 kg. Time of supply always should be arrived only for that 80 kg, not for the entire 100 kgs. Okay, please look at the example which I have given below for understanding the time of supply of services. On 6th May, booking of a marriage hall. Some agreed 15,000 rupee. Advance of 3,000 rupee was received. Usually this is quite a practical scenario. Whenever we go for booking, we pay some amount as an advance. And remember, this is a supply of service. Okay, 15th September, the function is held. The marriage is being performed. 27th October, invoice is issued for 15,000. So 27th October, marriage function is held on 15th September. But 27th October only, the supplier is issuing the invoice, indicating the balance of 12,000 to be paid, because already 3,000 paid by way of an advance. 3rd November, balance payment of 12,000 received. See now, 6th May, already advance received 3,000. Function held 15th September. 27th October, invoice is issued. Now we have to go by checking whether, as per Rule 47, this invoice has been issued. Whether it is issued, what is the condition in Rule 47? On or before 30 days from the date of providing the service, the invoice has to be issued. The service is being provided on 15th September, but ultimately I am issuing the invoice only on 27th October. So beyond 30 days. I have taken beyond 30 days to issue the invoice. Now, what will be the date that I have to put up under the first criteria? If no, then date of providing the service will be the invoice date. What is the date of providing the service? 15th September will be the invoice date. Because the supplier have not issued the invoice satisfying the provisions of Rule 47, and therefore I am arriving at the date of providing the service as the time of the date of invoice, which is on 27th September. So ultimately I will take 15th September as the date of invoice. Moving into the second criteria, date of receipt of payment. Already I have received 3,000 rupee advance on 6th May. So ultimately I need not go with any comparison, since my bank account getting credited on 6th May for this 3,000 alone. To that extent of 3,000 alone, 6th May will be the time of supply of services. This happens in earlier to all the subsequent transaction. This happens even before the supply has commenced. So 6th May will be the time of supply for 3,000 alone. Now, what will be the time of supply for this balance 12,000? Balance 12,000, I told you, date of invoice is 15th September. What is the date of receipt of payment? It is on 3rd November. The supplier is receiving the balance payment of 12,000. So now the comparison is between 15th September or 3rd November, whichever is earlier. 15th September will be the time of supply for this balance 12,000 rupees. And remember, since this is for supply of services, I am considering here the date of advance received also. If suppose if the same advance is received for supply of any goods, then in that case I will be ignoring this advance received date. Hope that is clear to you all. Moving into the next slide. See, we had the provision how to that is when the tax invoice should be issued for continuous supply of goods. The same provision we have the condition when the tax invoice should be issued for continuous supply of services. What is it? Continuous supply of services. In the definition slide, I told you, when the services are being rendered continuously exceeding 3 months, this will be the continuous supply of service. When the invoice has to be issued, when the due date is ascertainable. Suppose when you know the due date, invoice has to be issued on or before that due date. Suppose when the supplier doesn't know the due date or the due date is not ascertainable, before receiving the payment, the supplier has to issue the invoice. So before receiving the payment, supplier has to issue the invoice. Suppose if the payment is linked with the completion of an event. What is that completion of an event? See, let me tell you an example. There is a construction contract entered between a contractor and a customer. The construction contract is for construction of two floors, ground floor and the first floor. The condition is that on completion of the ground floor, 50% of the consideration will be paid. On completion of the first floor, balance 50% will be paid. So this is based on the completion of the event. So on or before completing that particular event, on or before completing either the construction of the ground floor first, 50% has to be discharged. So on or before completion of that event, the invoice has to be issued by the supplier. Since because this is linked with the completion. The same example, there might be few cases where the contract gets terminated in between. There might be misunderstanding between the supplier and the buyer customer so that he may cancel the contract, terminate the contract in between. In that cases, cessation of services. What is mean by cessation? Stoppage in between. In the case of cessation of a contract, when the invoice has to be issued, when the supply ceases, invoice shall be issued. To that, when the supplies invoice shall be issued when the supply ceases. Invoice has to be issued just before the supply is about to terminate. Supply is about to get cancelled. And what is the value of such invoice? Value should always be to the extent of the supply made. See, the agreement is for 20 lakh rupee. 10 lakh is for the ground floor and 10 lakh is for the construction of the first floor. When I complete ground floor and thereafter there's a misunderstanding between me and the contractor, I stop the work. I stop the contract, terminate the contract with them. So I have to make payment to the extent of the work completed. That is, I have to pay 10 lakh rupee. Whatever be the proportionate value of the work done, to that extent, invoice should be raised and supply should be accounted. So this is a point which tells you for arriving at when the invoice has to be issued in the case of continuous supply and cessation of services. Like we had a time of supply under reverse charge for goods, we also have a separate provision for time of supply of services and a reverse charge basis. So here we are we have to decide on look into two criteria, two dates. What is the again earliest of the two dates? What is the first date? Date of payment. What is the date of payment? Since this is the recipient will be paying, the date of entry into the books of accounts of the recipient or the date of his bank account getting debited, whichever is earlier will be the date of payment. The another criteria, the date after 60 day, the date following 60 day from the date of invoice. In goods, under goods for reverse charge, I explained you should land on 31st day, 30 days after. Ultimately, you should land on 31st day. Now for services, 60 days after, ultimately you have to land on 61st day. You have to arrive at the 61st day. So comparison between this date of payment and the 61st day from the invoice date, whichever is earlier will be the time of supply of services under reverse charge basis. Again, the residual clause, if it is not possible for you to arrive at the time of supply because there is no information, absence of information, then how do you decide? You better go with the books of accounts of the recipient of supply. When the entry has been made in the books of accounts of the recipient, that date will be considered as the time of supply under reverse charge. Supply by associated enterprises. See, what is mean by associated enterprises? When one entity is having control over the other entity, that will be both entities are called as associated enterprises. In this case, the supplier will be located outside India. He's providing a service to the recipient who is located in India. So what is the time of supply? Time of supply will be the date of entry into the books of accounts of the recipient or the date of payment, whichever is earlier, will be the time of supply when the supply is happening between associated enterprises. So we have a separate provision for associated enterprises also. Look at this example which I have given you for arriving at the reverse charge, time of supply of service under reverse charge. May 4, supplier issues the invoice. August 21, payment is made. So now you have to land on 61st day from the date of invoice. So from May 4, if you arrive at the 61st day, that will be on July 4. That will be on July 4. So now the comparison is between July 4 or August 21, whichever is earlier. Ultimately, July 4 will be the time of supply under reverse charge basis. Hope that is clear. Moving on to the next slide. See, there are similar provisions which are applicable for both the goods and services. Now, in the case of vouchers, what is mean by vouchers? See, vouchers are an instrument which can be exchanged for a payment, for a part payment. See, it is like gift vouchers, gift coupons, and ultimately we will be redeeming that coupons in some other shops, etc. So, the date of issue of voucher will be the time of supply. Suppose if that particular supply is identifiable. What is the meaning of the term supply is identifiable? See, I have received a gift coupon or a gift voucher, and that gift voucher tells me that I can exchange that voucher for purchase of pizza only in Pizza Hut. For purchase of pizzas only in Pizza Hut, not in any other outlets. So now the potential supplier is identifiable directly. The potential supplier is mentioned in the voucher coupon directly. So if I'm able to ascertain who is the potential supplier, the date of issue of voucher will be the time of supply. See, otherwise I have received a coupon which says that you can exchange this coupon in any other supermarket located within Chennai. Any supermarket, any malls located within Chennai. Now, can I identify the potential supplier at the time of receipt of this coupon? No. It is up to me. It is up to me to decide in which supermarket or in which outlet I am going to redeem that coupon. So it's my own will and wish. I may redeem it in some other places in Chennai, any places in Chennai. Since the potential supplier is not identifiable, the date of redeeming that voucher, the date of redemption of that voucher will be the time of supply. Now, this gift vouchers can be given not only for supply of goods, it can be for services also. See, free salon services. You can avail, if you have this coupon, you can avail a free spa services in any salon or spa. So it can be for services also, but the provisions are same. When it is identifiable, date of issue. When it is not identifiable, date of redeeming will be the time of supply. The last residuary clause, residual method, when you are not unable to identify the time of supply under any of the previous provisions that we have been discussing so far, the last method which is left to you is if the periodical return is filed, the date on which you are filing the return, the date on which the due date on which the return is to be filed, or any other cases, the date on which you are making the payment, that date will be the time of supply. It is applicable for commonly applicable for both goods and services. The last item, interest, late fee, penalty for delayed payment, etc. See, usually there will be a practice that the supplier will give you a credit period of 30 days. If the customer is not paying within that credit period of 30 days, for the next subsequent days, he will be levied interest also for delayed payment. He will be levied some penalty. He will be levied some late fee for all those delayed payments. What will be the time of supply for all those additional payments received subsequently? The date on which you actually receive, the date on which the supplier actually received those additional payment, that date will be the time of supply for those additional payments. Additional payments can be for supply of goods, equivalently for supply of services also. It is only for a delayed payment for consideration, so it can be for anything. Now moving on to the next slide. So we have covered section 12, time of supply of goods plus reverse charge. Section 13, time of supply of services plus reverse charge. Moving into section 14, time of supply if there is a changes in the percentage of tax. See, now these are all quite practical scenarios that whenever a supply transaction is happening, the goods might have been sent today. Invoice also issued today, but the goods will be reaching to the customer only after 7 days because both are in different states. For transit alone, it takes 7 days, 7 days in between. But when the goods was sent, the rate of tax was 28%. Suddenly, the government have changed or reduced or increased the rate of goods in this intervening period of 7 days. So ultimately, when the goods are reaching the customer premises, it is now 18%. So the government have reduced the rate. When the supply was done, it was 28. When the goods are reaching the customer premises, it is 18%. Now, how would you arrive at what is the rate that you are going to fix? if you say it is 18%, then ultimately it will be a loss for the supplier because he had bought the goods for 28, supplying it for 18% under rate. When the rates are increased, say when the goods are bought, it is 18. When you sell the goods to the customer, it was 28. If the supplier subsequently increase the rate to 28%, then the customer will fight. How can you? I agreed to purchase only for 18. How can you charge me 28%? So these are all the practical difficulties which might be happening. So now you have to arrive at the time of supply so that whatever be the rate at this time of supply will be decided as the applicable GST. Will be decided as the applicable GST. Now in this case, I have listed out this with a timeline chart, and this timeline chart tells you that what happens before the change, what happens after the change. See, in the first case, supply done before change. See, this is the time at which the rate of the goods have been changed. Okay, percentage change. What happened before the change? Supply is done before the change. Invoice is issued before the change. Payment alone will be done after the change. Payment alone will be done after the change. Now, what will be the time of supply? You just use two hints. Okay, you have to select the majority side. You have to select the majority side. What is the majority side? This side, left side, supply and invoice is the majority side. Now, when the supply and invoice is a majority side, you have to ignore the word supply. You have to ignore the word supply. So I'm just striking this off. What is left over? Invoice is left over. So now time of supply will be the date of issue of the invoice. The date of issue of the invoice. See, similar scenario with a small change. Supply is done before change. Payment is done before change. It might be by way of an advance. Okay, entire amount is paid by way of an advance. Payment is done before change. But invoice is issued after the change. Go by the majority. This side, left side is majority. After arriving at the majority, strike off the word supply. What is left over? Payment is left over. So time of supply will be the date of payment. Time of supply will be the date of payment. Now, different scenario, vice versa when compared to the case 1. Case 2, supply is done after the change. Okay, invoice is issued before the change, payment is done after the change, supply is also done after the change. Go by the majority, right side is majority. After arriving at the majority, I strike off the word supply. What is left over? Payment is left over. Payment is left over. So now time of supply will be the date of payment. Again, with a few change, payment is done before the change. In this case, invoice is issued after the change, supply is done after the change. Go by the majority, strike off the word supply. Date of issue of invoice will be the time of supply. So whenever there is a change in the percentage rate of taxes, it can be an increase or a decrease. But you have to arrive at the time of supply by keeping these factors, by keeping these points in mind. The next point, I'm moving into section 15, the value of supply. So we have covered time of supply. Now moving into value of supply. What is the value of supply? The value is always the transaction value. What is the transaction value? The price which is actually paid for the goods. Whatever I'm paying, what is the actual price? But it is always based on a condition that both the parties are not related. The buyer and the seller are not related, unrelated parties. If they are related party, then you have to go with the different valuation rules, which is also prescribed under CGST. Now I'm talking about a general scenario where you just go to a shop, you buy something. Do you know the supplier already? No. You don't know him already, unless it's located within your own residential premises, etc. You don't know him. Or he might not be a related party to you. You just give the money, get the product. This is only happening. There is no relationship existing between the supplier and the recipient. So this provision is based on the assumption that both the parties are not related to each other. When they are not related and price is the sole determining factor, you have to arrive at the value of supply. What should be included to the value? What should be included to the actual price? To that actual price, you also can include any taxes, duties that are charged under any other law. What is any other law? See, let me tell you an example. If you're renting out a property, you could have paid municipal taxes or property taxes for your property. All these taxes can also be included under the supply value. This is what the provision of section 15 tells you. But you cannot include the tax collected at source under the Income Tax Act. Why this cannot be included? Because the government has clarified that this TCS under the Income Tax Act is only an interim levy. It does not have the essential character of a tax. It is only an interim levy, so this should not be included. Otherwise, any taxes, duties, SSP, etc., whatever you have paid other than GST, please remember other than GST, it is not the GST taxes. Everything can be included under the value of supply. Any amount that the supplier is liable to pay but incurred by the recipient. See, sometimes few expenditure could have been taken up by the recipient himself, like the delivery van charges. The delivery boy, he will ask always after delivering the product, will ask the customer, sir, please can you pay me something? Now, this charges will be paid by the recipient. Even though it is paid by the recipient, it is actually paid on behalf of the supplier. So definitely supplier can include these charges also along with the supply. Incidental expenses like demo charges, testing, trial expenses. Before you buy a car, we always go for a test drive. So when you buy a car, the test drive charges also would have been included. All these additional expenditure have to be included in the supply value. The next one, interest, late fee, penalty for delayed consideration. See, already I told you, when the supplier provides you the credit period, but you are taking some excess time to settle the amount, then you have to pay along with additional late fees and interest. That also to be included under the supply value. Subsidies, excluding the subsidies provided by the central government and the state government. See, if a private limited company wants to satisfy its corporate social responsibility policies, it's asking you to provide the product at a very low cost. See, there is a supplier of notebooks. He supplies the notebooks to school students for 10 rupee. Now, this particular company approaches the supplier to sell the same notebooks for 5 rupee. The balance 5 rupee will be paid by the company to the supplier. So you collected from the students 5 rupee. I will pay you 5 rupee as a subsidy. This is an arrangement made between the supplier of the notebook and the company, private limited company. So this subsidy, because it is provided by a private party other than the central government and the state government, all these can be included within the supply value. So in that case, I will tell you that the cost of the notebook is only 10 rupee, not 5 rupee. Okay, even though I may collect only 5 rupee from a student, the cost of the value of supply of such notebook should always be 10 rupee only. Suppose if the same 5 rupee, let us assume if it is provided by a government, by central government or state government, in that case, I have to remove this subsidy. So in that case, the cost of the notebook, the supply value of the notebook will be 5 rupee. It is not 10 rupee. Please remember, identify this difference. When it is provided by government, it has to be excluded. When it is not provided by government, you can put it under the supply value. And discounts. Discounts are also provided. See, sometimes at the time of supply, I will provide you a discount. So in that case, the discounts can be reduced from the value, and net value only you will be charging GST. Sometimes discount might be provided in a subsequent days. Maybe at the time of making payment, or immediately the supplier will provide you after 1 week. He might call you and say, sir, I've got you a discount. So 10% of the product values will be reduced. So I will issue a credit note. In that case, how do you deal with this? When the discount is given post supply, after supply, the condition that you have to look upon is these discounts are to be linked to that particular invoices. Then only you can reduce it from the supply value. If it is not linked to invoices, you cannot reduce it. And suppose if it is linked to invoices and the supplier is reducing his output tax, reducing the value of supply, the ITC, input tax credit, already claimed by the recipient also should be reversed subsequently. Also should be reversed, so that then only you will be giving a full impact to this particular transaction in the case of post-supply discounts. See, I've given you an example for computing, arriving at the value of supply. See, this is the list price of the goods, 50,000. Taxes levied by municipal authority. I told you any taxes other than GST you can include it. So 5,000 municipal taxes. Packing charges, incidental expenses, 1,000 rupee. Subsidy received by NGO. Subsidy received by a NGO, non-governmental organization. Remember, this is not a central government or a state government subsidy. This is other party, third party subsidy. discount at 2% on the list price. So now this is my computation. List price 50,000, taxes levied by municipal authority 5,000, packing charges 1,000 rupee. Since this is a subsidy from a non-government, I am not excluding this from the supply value. So again, I am including this. So I'm again adding this 2,000 to my supply value. So finally my value comes to 58,000, and I told you discount is at 2% on the list price. So what is the list price? 50,000. You have to arrive at 2% on the list price 50,000, which will be 1,000. So my net value of taxable supply is 57,000. Considering all these adjustments, all these are inclusions, and discount is an exclusion because it is mentioned in the invoice. Hope this example is clear to you all. So I think I'm at the end of the session and my time is also over. So it's time for question and answers. I'm ready to answer, take up your any questions. So before that, I would like to thank the entire organizing team of Krishnaswamy College for giving me this wonderful opportunity of interacting with you all. Thank you. So please let us move on to the question and answer session.
Thank you, ma'am. Here's a question from Vijay Gayatri V, ma'am.
Yes, ma'am.
What is the time period within which invoice has to be issued where the goods being sent or taken on approval for sale?
See, actually, the recipient, when the goods are taken, the supplier will not be issuing any invoice. So the supplier have to wait till the recipient confirms for the supply. The moment the recipient confirms, the invoice has to be issued at that time. Suppose if the recipient is not confirming, he remains silent up to 6 months. So at the end of the 6 month, on that particular day, the supplier has to issue the invoice.
Thank you, ma'am.
Yes.
Another question from Vijay Gayatri. What is the time of supply in respect of supply by an associate enterprises located outside India?
See, outside India, you have to always look upon the recipient angle only, who is in India. So from the recipient angle, when the date of payment, you have to look upon the date of payment or the date of entry into the books of accounts of the recipient. Whichever is earlier will be the time of supply.
Thank you, ma'am. Another question from Nishantini. How will service relationship life insurance business value?
Life insurance businesses, see, that is always on the you're talking about the valuation. In that case, whatever be the transaction value, that is what I told you under section 15, whatever be the transaction value that is happening between the supplier and the recipient, that you have to keep it as a supply value. And always remember the inclusions points and the excluded points also, along with arriving at that valuation.
Thank you, ma'am.
There is another question also. How will supply vouchers, tokens, coupons, stamps valued under GST? See, usually you will be issued a coupon only with the value, right? Because at the time of redeeming, you will be having a value for which you are going to redeem it. Say if I buy something in a supermarket for 5,000, I am being issued with a coupon of 500 rupee. That amount will be put up in the voucher itself. So this coupon is worth for 500 rupee only. So that is the value that I am going to redeem it. So ultimately that is the value of supply. Whatever being mentioned in the coupon, that is the value of supply.
I think the question is over. Now it's time for vote of thanks, ma'am. Now I call upon Ms. Vasundhara to share vote of thanks.
Ladies and gentlemen, a very good afternoon to all. It gives me an immense pleasure to deliver the vote of thanks for this event at all dignitaries assembled here. I extend a really hearty thanks to our chief guest, CA R.V. Bhuvaneshwari ma'am, who honored this function with her wonderful thoughts. Thank you, ma'am. I would like to thank our Honorable Dean, Dr. R. Revati, our respected Principal, Dr. R. Geeta Rani, our Director, Shri K.B. Arun, our beloved HOD, Dr. J. Radha, and other professors. Last but not the least, our beloved audience for making this function as a grand success. Once again, I thank one and all present here. Thank you. And I request you all to fill up today's feedback form on the comment box, and also I request you all to attend the remaining 2 days webinar and to fill up the form to get your e-certificates. Thank you. Thank you so much, ma'am.
Yes, thank you, madam. Thank you all.